Good morning. This is Ken at Tortoise Capital with a review of the weekend trading report for June 2nd, 2018. We have a market that is in bullish normal conditions on an annual basis using NDX 260. We're at 73 out of 100 at the higher end of neutral. Using the 10-day NDX for a shorter term look, we're overbought at 90 out of 100. Looking at the market mosaic, price with respect to the 200-day moving average is yellow bullish at 3.73% above the 200-day moving average, or about a 1.5% above the boundary to sideways. The slope of the 50 has improved slightly to 0.08%, but it is still yellow bearish. ADX is a very weak non-trending 11.3. The risk index is the 30-period moving average of the VIX divided by the 10-period. 1.0 is the boundary between risk on and risk off. That reading at 1.049 puts us into risk on conditions. We take that score and look at the last 5,000 trading days, compute the average and standard deviation to come up with the risk Z, which is at 0.45. Here you see a 90-day time series of that indicator. So we are 0.45 standard deviations above the long-term average. So this still favors the long side and swings. However, the declining risk Z puts this market at risk in much the same way that it was at risk here on this declining side of the hill. This opens us up to short, sharp, bearish moves, usually one-day large range days that are great for intraday trading, but which challenge our ability to stay on the long side for swings. So this is a warning sign to ensure that you have your stops in, that you're taking measured shots, that you shorten up your time horizon, that you are more prone than usual to capture profits when you have them in hand. A bird in the hand is worth two in the bush in this market condition. As long as it stays above that zero line, however, the long side is still favored, so we can still keep taking those shots. But this is a warning about continued volatility ahead. These are the holdings for the month of June for the blended monthly rebalancing for the different portfolios. And the theoretical exposure of ETF2 is at 70%. Just a quick look at the blended monthly rebalancing portfolios here. Only emerging markets in Latin America are on a cash signal. You can see how crushed ILF has been, and correspondingly the advantages of being in the U.S. small caps have been excellent. Some strength came back into tech and to real estate this week. The ETF 32 portfolio looks similar. Brazil even worse than the rest of Latin America. Consumer staples continue to suffer and had a bad week. The leaders were energy, small caps, tech. Dow 30, I'm looking for momentum to continue in plays like ExxonMobil, Merck, Microsoft, and Intel. That's a combination of the energy and technology sector. Boeing had a really good month, but pulled back somewhat this week, so there may be some room for it to continue. Let's see. Among the sector spiders, financials and home builders suffered this week. Strength in oil and gas, energy, healthcare. ETF Max, this is looking at over 500 ETFs. And then examining the most liquid ones. The winners have been energy, small caps, continuing the themes that we've seen before. In the market health check, these vertical blue lines are 10, 20, 30, 40, 50 days worth of look back. The horizontal red lines are support levels, which have held before. That's the belly of the dragon. And the second, going back another wave, the second belly of the dragon. These purple lines are price targets to the upside, which are acting as resistance. But if it gets through this line, for example, at 276.21, off it goes. See the 200-day moving average here. and the PSAR had given us a nice up move. 3 days of hesitation, but this strong move on Friday, catching in the market a little bit by surprise. The PSAR reversed once more to the upside. So this support region in yellow is continuing to hold. I mark this off as support because in this little oscillation here in the dragon, there's a lot of volume that's been traded in that price level, and it's acting as support. That's from that range from the top of the dragon to the bottom of the dragon. And so far, for the last almost 20 days, this has held pretty well. The slope of the 30 is still up. The river is up. The 200 is acting as support, so tentatively optimistic. See the long-term fair value here at the RL270. And if we can get through 276, the next target is the all-time swing high up here around 283 3/4. These red lines act as support levels on the way down. Or targets if the support collapses. If the Bollinger Band mean doesn't hold the middle of the river, then this support level down here is the next one in play. And if that collapses, look out below. Looking at the simplified MACD histogram, the 1035, just notice the big adverse move, and then you also get a P1 outside this red river. This is the indicator you could start stalking the long side right in here. Love it, right in that little pocket. All the way to the point where it crosses the 0 line. That's the next test. It got through and then has held since then. So you have a low and a higher low, creating a little pocket right in here. This was a really nice entry. This is where that signal line crossed over and then crossed the 0 line. And then the nice long run to here. This is where that is starting to be put up or shut up time. And that one spike down, there was no follow through on it. It was reversed intraday, and the vote of the last 3 days has been up, so I'm cautiously optimistic here. Another day of upward price action, and this MACD histogram line will recross its own 5-period moving average, and that will be a buy on dip opportunity. So I'm ready to get long on this. IWM looks even better. ETF regionals, 3 out of the 10 are on cash, so that puts us at 70-30, down from 80-20. S&P at 51 is better than EFA at 47. Inside the U.S., it's small caps, tech, mid caps, large caps. 2 strongest sectors are small caps and tech. The 2 weakest sectors, Latin America and emerging markets. You see the strength in the world market model for the U.S. small caps. Mid caps are next. Dow is lagging a little bit. Asia generally underwater, less Hong Kong. France and UK, but otherwise Europe's underwater. Canada's the only thing in this hemisphere besides us that's looking any good. Commodities and oil have been doing okay. This is a rebound here in real estate as well. Top members of the ETF 30. Oil and gas, small caps, tech. Nothing surprising there. I like IWM as a green and white, and the biotechs green and white. These are they were good and they're now great, and so I'm prepared to exploit new strength on them in swing trading. And this is certainly candidates for turbo trading if we see outperformance to the upside. So if the market's up and small caps are better, that's an automatic buy and an intraday turbo. Same with biotech. Liquidity stats. Shifting to the daily. GE, Disney, Morgan, Goldman, Chevron for the 10-day max pains. Lots of symbols below their 200-day moving average that are setting up for short side potential collapses. Lots in the auto framer to choose from. All-time, lots of breakouts here from 10-day all the way out to 12-month for Microsoft and for Intel. So I'm looking for more performance out of those. No resistance overhead. In the ETF 30s, you had breakouts here in technology and consumer discretionary, and again, technology. Breakdown of a bit here in for the 10-day and the 1 month in oil. Lots to choose from in the auto framer, a handful of good dojis as well. Daily pinch and stretch. Starting to get some stretch to the upside here in the indices. Silver on a Z3P super pinch. Lots to choose from in the auto framer and the RLFF. Got some symbols here. This is what that looks like in 3M. This is 10 ATRs below its long-term fair value. You can see where we were starting this trade to the downside. Walmart, let's take a quick look there. Again, 10 ATRs from here to its long-term fair value. Looking for deep discount, buying it on sale. It's finding support down here below the 200. I could see this kind of a trade here where you're looking for a return to the 200 and looking to buy from that inside day with a breakout. There's some possibilities intraday. GE, on the other hand, is the getting well ahead of itself here. This is where it's 11 ATRs above its long-term fair value. This little looks like an intermediate term low, higher low. So if you can find support here at its own 90, but above this, then this looks like another run towards 16. Failure out of this doji, though, I'd be looking at 13 and 12.5 on the way back to fair value. So this is perfectly poised for a critical state kind of a trade in either direction. It's below its 200. And the signal line is getting ready to cross below, so you can pick up the short orientation. This is a perfectly placed doji at the end of a nice run up, but it's had 7 days to get better, and it hasn't, and 3 days of indecision. So at the first sign of weakness on this thing, I'd like to be short with the target down here around, I think we said 1240. Yeah, around 1240. So that's the auto framer and RLFF. Daily squeezes, a number to choose from here. Apple, low. These are all poised for one-day pops. Really, market's been marking time for 15 days. Just starting to get an upside stretch. And that looks starting to look favorable on the long side. But again, this is a stock pickers market. There's a lot of indecision out here. We've already had a nice recovery run. You can notice here. This is where it started getting weak before. So with the volatility declining, sharp volatility moves would not be a surprise. So the 30 has moved to the top of the river. The 90 has turned. This is a return of strength to the market, so we're getting some traction in here. That's at the upper edge of the river. And the 10, notice it has been horrible, higher low, higher low, higher low. So there's room for this to grow. And then if it does, it breaks out and it gets up to 285 and then to 288. And that's everything I want to cover. Just throw a couple on here for you if you want to stop and study that a little further. This is Ken at Tortoise Capital. Keep your risk measured and your powder dry.